Welcome everyone to Steve Savant's Money, the name of the game. I'm your host, Steve Savant, syndicated financial columnist and money color commentator. On today's show, the IRS perspective, part 3 in our series on captive insurance companies, the business alternative with author, speaker, and nationally recognized captive insurance company expert, Wes Zirk. Welcome to segment 3, Wes.
Thank you for having me.
Oh, I have to bring up the IRS, don't I? Now, I noticed that you were telling me a couple years back, every year they seem to have a meeting, and all the people that are in the captive insurance, like yourself, everybody goes to this meeting to find out any nuances in the code, any changes in the regulations. Has Congress made any new law? We have to kind of know what's going on and their engagements. I've noticed out on the internet, when you talk about captives, there are a plethora of companies out there claiming that they know what they're doing and so forth. And it seems like the IRS is going after many of these companies because they seem to have irregular practices. You have a very studious way of approaching this. It's academic, and more than that, it complies with the law. Let's talk about the IRS first, and what are they looking at in captives?
Right now, there's some promoter audits out there for captive insurance companies. Now, I don't necessarily see that as a bad thing because, as you mentioned, when I got into the business of captives, and this is all we do. We don't manage money. We never touch product. We don't ever touch people's accounts, do any of that. We're strictly a manager. People that used to sell 419s, 412Is, VIBAs, 419 AF6s, their income went down when the IRS put those on the listed transactions. So as a result, now they're captive insurance experts because they thought this was a perfect way to sell life insurance. And there were carriers out there that did it too. And that's really what raised the IRS's ire in this whole thing. And, I would say there's two different sides of captive insurance company. There's people that are very, very good at risk management. And that's the Marshes and the Aons of the world that are insurance experts. And then you have tax people who just know the tax benefits of the insurance companies. And those are the people who really don't understand the products that they're selling. They don't understand property casualty insurance. So they're out there selling hurricane coverage in Wisconsin. Somebody came to me, was an orthopedic surgeon in upstate New York, and he was making $1 million a year and wanted to put away $800 because that's all, all of that was extra profit. And we started looking at it, and I said, the most I can get you is $100,000 in deduction because you have your professional liability, you have commercial property, you've got these deductibles. So we worked it up, and he called somebody else, and they came in at $800,000 in premium, exactly what and I'm like, let me see this. So they gave it to me, and one of them was terrorism risk. And he was paying $400,000 a year in terrorism insurance as an orthopedic surgeon in Albany, New York. And I'm like, this is completely crazy. To put it in perspective, we have a client that's a commercial laundry. So they do all sheets and towels and bedding and things like that for hotel chains. They have $60 million of equipment in the Port of Los Angeles. And their terrorism insurance is $2,800 a year. So somebody with $60 million in something where terrorists were likely to hit is $2,800 versus an orthopedic surgeon at, $400,000 for the same type of coverage. So the IRS, they're wise to, overinflating premium dollars for risk that really doesn't exist. So that's where, I always tell people my warning is if it sounds too good to be true, it is too good to be true. Most of the captives that I see that are, I would say, on the more aggressive side of pricing are offshore insurance companies. Because offshore, you don't need actuarials, you don't need certified financials, it's kind of the Wild West, where domestically, a domestic insurance commissioner, his job is to oversee and make sure everything's done properly. Because the last thing they want to do is get in the crosshairs of the NAIC. So if you're domestic, chances are good that your numbers are more conservative than they would be if they were offshore.
Now, I noticed with the IRS, this is a company. We have our normal C Corp filing, but do we have additional filings because we have a captive inside this entity?
You have your regular tax return that you have to file. There's also tons of information that gets filed with the Department of Insurance, if that's what you were asking. So there's annual statements, there's quarterly statements.
But isn't there a form also for the IRS?
Yeah, that's brand new, as of a few days ago.
Oh, I mean, we're talking really like 30 days out, right?
Yeah, it was due May 1st, and that's the 8886 form.
What's that about?
The 8886 is used to report listed transactions. And captives were put down as something called a transaction of interest. 831B captive insurance companies. Now, the IRS said in their memo, it's Notice 2016-66, they said they know there's good captives, they know there's bad captives, but right now they just don't have enough information to determine which ones are good and which ones are bad. So as a result, that everyone who has an 831B insurance company from 2006 to today has to file a form that was just due a few days ago that will actually put year by year how much they paid in premium, policies written, claims paid. So it was a very, very in-depth reporting that insurance companies had to do.
Now, it's my understanding if you don't actually do this form, complete the form, and send it in 8886, you could be in major trouble with the IRS.
Yeah, there's hundreds of thousands of dollars in penalties that you could be facing.
Okay, and when is that due?
When was the form due?
Yeah.
The form was due May 1st as the first one.
Okay, and will that be every May then?
So it was the first reporting requirement was May 1st, and now going forward it has to be attached to a year-by-year update has to be attached to your tax return that you file with your business. So with the captive insurance has to file the 8886. The business that took the deduction has to file the 8886.
So is this an accounting procedure within my company? If I have this captive, that I have to do this myself, or do I outsource this?
Oh, this is all, most captive managers were just sending their clients the form and saying, this is what you should fill out on the form. We actually went to the extent of filling out the forms because, the information required was so in-depth that, one of our clients, just the report was 2 pages, but there was a 23-page addendum.
And you're doing that.
And we did it.
For your clients.
Correct.
So they do want to outsource this.
Oh, yeah. Because I don't think they have the capability to do it themselves.
Now, when this new code came up, 8886, there are other people in the market. There are other captive promoters. Did they kind of pull back because they don't want to deal with it? Have you seen this kind of separate the players from the pretenders in the market?
Yeah, I've seen some captive managers leave the business because they realize that, now captives are, if they didn't know what they were doing, they're just, they're leaving the market. And we've also seen a shrinking in the number of captive managers because initially they got into it thinking that this was easy, that it was just like managing a 401k or just like a 412I. But then they got into it and they realized, wow, we have reporting requirements, deadline stuff that has to go to the Department of Insurance, and it's pretty detailed and intricate. And they realized, well, this isn't our capability.
Now, on the web, before I came into the studio the last couple of days, I've been out there and I've seen people promoting CICs, captive insurance companies, and it seems like their number one focus is to insert life insurance into it, somehow getting a deductibility and then trying to pull the money back out free. That, to me, could raise some serious flags.
Yeah, it raises it for me. And we've seen those. And we're helping clients that were with other managers who were in IRS audits, and we're now having to charge them by the hour to help
unwind this whole thing.
Well, help them just get the IRS the information that they require. But the IRS, just having life insurance doesn't mean that it's bad inside your captive. But what the IRS has said is by having life insurance inside of it, you now have a steeper hill to climb, because when they see life insurance inside of it, could be completely valid, reasonable. I'm not saying it's not. But they look at it and they instantly think that there's something shady going on, and you have a much harder time proving that the rest of the captive was legitimate if the life insurance is inside of it.
Okay, so we're really looking at these things, and the 8886 will probably separate more as the years go on, because we really want this to be done right and for the right reasons. We're not building a complete entity, putting reserves in just to buy life insurance.
Yeah. And that's why I like health insurance, workers' comp, general liability, real coverage. You know, to me, the cost of running your insurance company should be paid for from the savings on your traditional insurance. And health insurance, always has claims. No business ever puts $1 million in premium and doesn't have a health insurance claim. Workers' comp, somebody will always get hurt. So to me, from the optic standpoint, if you're paying $1 million a year for insurance that really has no chance of getting a claim on it, and you pay, no claims out, over the long term, that looks fishy to the IRS versus paying $1 million for health insurance, workers' comp. Then you start layering other coverages on top of that. But in that case, if you're paying $200,000, $250,000, $300,000 in claims, it looks better from the optics of the IRS.
Well, don't forget to watch our next segment, Is Your Business a Captive Candidate? Part 4 of our series on captive insurance companies, the business alternative. And keep in mind, before moving forward with any of the ideas on our show, always check with your tax consultant, legal counsel, or financial advisor. You've been watching Steve Savant's Money, the name of the game.